Very good morning, friends and traders. I'm Narnakshi Swami, welcoming to my channel Smart Index Edge. Yesterday, the price action, after seeing this price action, I felt I must do this video. This is very important price action. It can be seen on and on every time frame, whether it is daily or a small time frame, it's an hourly or 15 minutes or 5 minutes. Since market is fractal, but you can see this price action, you can see I clearly wanted to make this idea. If you would have noticed yesterday, the first hour candle, you can see this is a huge candle covering, standing like a wall and engulfing the previous day 3 hours candle. That means it went below around 12:15 to 1:15 level, and it stood like a wall. You can ask question, why big money plays like this? Why the big money plays like this? They create situation where others are forced to react. See, if I change the time frame to 15 minutes, this is a continuous fall on an 15 minutes candle. It is a continuous fall. And price has been sucked in within an hour. It moved hour. They create situation they are forced to react. How many people might have reacted pressing the button, sell button there? You could have, many people might have reacted. See, in this candle, hourly candle, this is the big red bars like this, three red bars, and finally fourth red bar is going up and closing here. This is the presentation. Why do they do that? Because the big money has got problem, the liquidity problem. If they buy at once or if they sell at once, they will have bad prices. So what they do, they create situation. What is that situation? They create urgency for others, create comfort for themselves. They created an urgency for others to press the button, sell button. People, all retailers, they might have reacted for that and they might have caught. And they created comfort. They are standing like this price action is standing like a wall. Nothing has happened. Later, you can see price staying within this wall. Within this wall, from the range of 26,208 to 26,117, price did not move down to this level, but it was stayed within the range of nearly only if I take the tool and measure this was the only range. So, what should be your strategy in such situation? When you see the big money standing like a wall, stay away from the market. Stay away from the market. You can see 45 points range, 1, 2, 3, 4, 5 hours. The market, because yesterday was expiry. They wanted to theta decay, premium decay, confused everything. And they created urgency. This is the speed of coming down, removes thinking. Removes thinking, and on retailers stop thinking. immediately they will go by seeing this riding of this sudden breakdown, they react. They react, press sell button, they get caught when it got sucked. Speed creates mistakes. That's why speed becomes. How many times you might have noticed on an intraday basis the market collapsing so fast, so you stop thinking that is the huge volatility and you will get stampeded. Or if you would have bought, you will get panic like that. Speed forces emotional decisions. You will decide in a wrong way. When people don't have time, they give bad prices. They don't have time. Time is not there for them to think. So they start creating mistake, forces emotional decisions, and they give bad prices, definitely. If they are, they have pressed it. Press the button, sell button. What did happen? Markets went up and stayed within this range. Big money is not directional first. Suppose if you see such a huge candle standing like a wall, it is not directional. They are positional first. What do? They actually contain the price within this wall and order absorption gets. You might have seen why price has been not expanded. Only here it is a failed breakout. How many people might have got trapped thinking that it is a breakout and market sucked in and it closed. Same candle, same hourly candle, you can see it has made an engulfing candle outside bar, and then retest, and then market has closed down. So what you need to see, big money intuitions. Big money is not directional. When it does like that, stay away from the market. So big money cannot afford surprises. It wants controlled risk, wants liquidity, wants direction, not direction. So here liquidity has been created over here by engaging retailers, buyers and sellers, and finally they took the control. The direction is simply it was down. That's why it has been closed near the low. Nifty, after going to 26,000, if I place the cursor, you can see in the market made 26,233 and closed around 26,723, 56 points down. Retailer traders, problem with the retailers, they want quick profits. That is the psychology. They take advantage, big money take advantage of this retailer's weakness and they turn it for their as an opportunity for them. So retailers want quick profits. They might have acted immediately. They got caught. React emotionally. They have reacted emotionally because then price action also, they read price action. It has been created, engineered. Liquidity has been engineered here to get trapped. So the retailers accept risk without control. There is no control for them. Market is designed to shift risk from the prepared to the unprepared. These prepared big money shift the risk to the unprepared. We are all unprepared. Sudden move. We are not prepared for that. They shift the risk. So do not act when there is such a type of let the calm, let the storm subside. Whenever there is a gap up, this is also like that. It is a wall. See, if you go, let me remove all these things, and if I remove all these things, you can see the entire price action from here to here. You can see it's like a from this area how the price has moved. It created a wall over here and contained the price. Next day only, this has happened. The market moved and they contained the price and slowly they moved over here. You can see the change in price action over here. There is no gap. With the gap, they moved up and it is like a same type of price action. A wall has been prepared and liquidity sweep up happened. Liquidity sweep. See, they moved up to this level. You can see there. Price moved up to this level. They got the liquidity over here. Stop loss from the retailers. This area. And your market turned down. Now, what can happen today? What can happen today? Still, they have not gone down below this level, low level. They may push the market, create an illusion. Here comes when they have taken the liquidity, they will try to mitigate first because they have to spend more money to get swap all these stop losses. These are huge stop losses, like a river flowing, money flowing. They have swapped all those things. They will first mitigate, try to go and retest, and you need to see for the failure of this level. If they cannot go past this level, then it is confirmation that their direction will be confirmed. This is price action, friends. This is how the price action moves because they have created a situation, they have created imbalance, time compression has been happened in this, sorry, in this, it's not moving. Let me take out. In this move, time has been compressed, price has moved very swiftly. When there is time compression, time has to be balanced. They may balance this time slowly so that they can buy time because the price has moved very fast. Now, time has to balance. It can go slowly, they can take time, they may stay within this range, 26,114 for one or more days, and then they can come down, sudden fall. You will not be prepared for that. The next day it will gap down or something, they will do that. But they are preparing here. Here already a wall has been created and orders have been absorbed and sellers have been, their direction is little bit evident on this price action and we need to have confirmation. So don't do, when this sort of price action comes over here, wait for the confirmation. Price action is always confirmation. You need to get confirmation before taking any action. When you bring in this discipline, risk can be avoided. You will have guided risk, not random risk. You are not going into a random risk or trading into a random risk, you can take a guided risk with confidence. So, friends, in my next video, I'm going to members only video. I'm going to present this type of situation in multiple time frames, and I'm going to make this video for members only as an educational price action pattern. You need to learn that. So this is an example, just an example I've given. And if you see this, three levels of rise. And this level of rise, see, from this level of rise to this level of rise, and this level, third level of rise has been stunted, and it is an imbalance, it can come down. You can see the imbalance. If I put this volume profile, you can see the imbalance every step there. Narrow, and most of the price action, you can see point of control is here. Point of control is here. This is like building castle on a sand. Thank you very much, friends. Price can collapse. Nalinakshi Swami signing off.